Hey guys, welcome back to East Texas Living. My name is Esau Tercios. I'm a realtor in the East Texas area. And in today's video, I have a very special guest that's going to give us a little insight on what's going on with the mortgage rates and the outlook for next year. If you haven't already, go ahead and subscribe to the channel, like this video, and enjoy the interview. Welcome, everybody. Today, we will be getting the opportunity to get some insight on what is going on in the mortgage industry. We're going to learn of the recent rate drop and what that means for home buyers, and then what buyers can do to lower their rates. To give us that insight, my good friend Philip Rowe is going to inform us on what's going on. Welcome, Philip. How are you?
Hey, good. Isal, how are you doing?
Doing good. Doing good.
Thanks
Thanks
for
for being
having
here.
me.
Yeah, of course, of
Yeah.
course. Before we begin, just tell us a little bit about yourself.
Yeah, so my name's Phillip Rowe. I work with US Bank. I've been in the mortgage industry for the past 7 years. Have a lot of good insight, have seen things rise and fall as far as rates go. So look forward to sharing some of that information with you today. Anybody needs help, feel free to reach out to me at philip.rowe@usbank.com, or you can reach me on my cell phone, 903-749-0092.
Perfect. So, as you mentioned, the rates have gone up and gone down. So right now the mortgage rates have gone down. Is this just a short-term drop?
I think what we're seeing, everything's following along with the reports from inflation. So as long as that curve keeps going in a downward spiral, we'll see rates drop. The 10-year Treasury, I don't know if you follow that, but that directly impacts the mortgage rates. They
Okay.
have dropped over the last 2 days
Okay.
significantly. So we have seen some price decreases where rates were mid to low sixes. We're down in the upper fives right now. So that's exciting for us in
Yeah,
this market.
that's good.
So I believe as long as we keep seeing these trends downward, we'll continue to see rates drop. Keep December 13th on your calendar. I think the Feds are supposed to release some data on
Okay.
inflation to see where we are for the month of November.
Okay. Yeah, that's good to know. Um, so I know with rates being up and down, and most of the concern is trying to keep those rates down for buyers. How can buyers lower their rates?
Yeah, buyers can lower their rates several ways. One way, obviously, is they can, in the form of points, they can buy their rate down with points. Those points costs are set daily depending on market conditions. So it's always important to have a good conversation with your loan officer to understand, your options for those rates. Something that's become really popular is seller contributions towards buy downs. So
Hmm.
that's a second option for buyers. In a whole, how that works is the seller would pay the points down to buy your rate down over a short period of time. For example, we have a program called a two-in-one buy down.
Okay.
So if your rate was, say, 6%, the sellers could pay enough points to buy your rate down to 4% for the first year, help you
Okay.
save on interest rate, save on that interest that's being paid. The following year, it would go up 1% to 5%. And then the third year, you would be back at your original rate of 6, what you were quoted. So those are two of the best ways to help tackle some of the higher interest rates that we're seeing.
Gotcha. Um, One other question, can buyers lock in their rates?
Yeah, so buyers can lock in their rates typically for 60 to 90 days right now.
Okay.
We have some programs where if you're purchasing new homes that are like speculative builds from a lot of these builders that are definitely capturing the market space for people moving from renting to first-time home buyers, we have programs where you can lock your rates out to 12 months. So that's really important when you're
Okay.
speaking with the lender. How long is that rate good for?
Okay. Yeah, good to know. Good to know. So the next question is what is the outlook for next year?
I think going back towards, as I mentioned before, the outlook's going to be determined on where the economy sits with inflation. The Fed seems to react quite quickly with their federal funds rate, which is solely reliant on that report as far as where they initiate raising or lowering those rates. So it's going to be something to track going into the first quarter of next year to see if the feds are going to back off on raising those federal fund rates for us. I think if they do, things will start stabilizing. Most of the reports we're seeing, we're going to probably hang or hover around the 6% range going into next year.
Okay. Okay. Um, so the last question, what are the current requirements for anyone looking to get an FHA loan?
So FHA, there's three things they're going to look at. Obviously, your credit score, your income, and how much that you're wanting to put down. So right now, our bank has set a minimum threshold, and I think most lenders have followed of 620. That credit
Okay.
score needs to be 620 and above. You need to have a good, stable employment history of 2 years to
Okay.
show that your ability to repay. And then FHA requires a minimum of 3.5% down on down payment. So make sure that you have that down payment requirement ready. And then, a fourth thing to throw in there is that um, they look at your debt to income ratio. So what is your income versus the debt that you have?
Okay.
That standard is usually set at 43%. Now, there's some compensating factors that allow for higher ratios, which really depends on your down payment and your credit score. So we've seen them go up above 50% in some cases, but it's just a case by case scenario.
Okay. Yeah, thank you for that great information. Um, I know you mentioned before to me off you've mentioned to me that you have a special program that you do as far as like taking care of some of the loan origination fees. Could you explain some of that?
Sure. So from time to time, we offer things called pricing exceptions, so that if we need to get competitive, especially help borrowers with some of their down payment and closing costs, we can give those pricing exceptions towards closing or to be applied towards their rates. So, for an example, right now, um, with approval, we've been given a 0.60 credit. So on a $400,000 loan, that's $2,400 that can be applied towards closing costs. Or if you want to apply it towards buying down your rate, you can use it for that as well. So it's a way that we've been able to help borrowers get into homes to overcome these higher interest rates,
Yeah.
less money out of their pocket. And then also, we have a flat fee. So we don't charge origination. We just charge 770 for processing and underwriting.
Okay.
And then on top of that, if our borrowers are willing to open an online checking account, we'll give them a 1/4% off the loan amount with a max of $1,000 credit. So those are two ways to get credits from us here at US Bank, where we're helping our borrowers get into homes.
Yeah, that's good. It sounds like they have a good option when they work with you, huh?
Yes, absolutely.
Well, good. Well, Philip, thank you so much for your time. I hope that this information is helpful for buyers out there hoping to purchase their first home or another home in 2023. And I look forward to us doing this again.
Absolutely. It's been fun and look forward to doing this again sometime in the near future. Appreciate it,
Yes,
Esau.
yes, sir. And for those of you watching, I will link Philip's information in the description of this video. And then I will also link my information as well if you're looking to buy or sell a home in the East Texas area. All right, until next time, thanks.